Hey team, and welcome baseball fans. Babe Ruth, the Sultan of SWAT, crushed his biggest home run of all time, and you've probably never even heard about it.
That's right. No, we're not talking about that 573-foot homer he drove out of the ballpark and right into an alligator farm. What we are talking about is the epic home run that he crushed as a New York Yankee when he started investing half of his annual salary into his retirement account. He started doing it in 1923 and continued through 1929. So Babe hit an epic home run, financially speaking, because he didn't lose any of his investment money in the humongous stock market crash of 1929. Not a single dollar. And he didn't lose any of his investment money in the years that followed until the market bottomed out in 1932. He didn't lose a single investment dollar.
Wow. Ruth's got an incredible investing story. It's an important lesson for all of us to learn from because he was smack dab in the middle of the Great Depression when he retired in 1935, and yet he didn't worry about money at all. He had complete financial freedom.
So what about your investments? What would happen to your retirement account if we experienced a huge financial disaster like the one that happened in the great stock market crash of 1929? It's a really important question that you answer for yourself today because many of the smart money people think we are well on our way to having that kind of a financial catastrophe in our country. So we're often told those who fail to learn from history are doomed to repeat it. So let's learn from Babe Ruth's history of investing. We're going to give you a quick blast from the past to teach us how Babe Ruth won his money game by completely avoiding the stock market crash of 1929 and retired a national champion.
So huddle up, team. We hope you're all doing great, and if you are new here, we are John and Tara Thorman, your financial success coaches, and we're here to help you achieve financial freedom faster so you can enjoy it longer.
In this video, we're going to examine Babe Ruth's retirement investments and how they protected him from losing any money whatsoever during the stock market crash of 1929, and how it stands in such stark contrast to what was going on at the time and the millions of people who lost everything. They lost their jobs, their savings, their homes. It was devastating. All right, we're going to tackle this topic right after you crush that like button and subscribe to the channel. Be sure to click on that bell icon as well so that you're notified every time we put up a training video. So welcome to the team. We're really glad you're here.
So here's a little background to Babe Ruth's story and its connection to our present day. So this Monday, October 28th, is the 95th anniversary of the great stock market crash that ushered in the decade-long depression.
In 1929, the Philadelphia Athletics had just won the World Series in Game 5 and became the national champions. That was Monday, October 14th, and nobody saw what was going to happen next. Just 2 weeks later, on Monday, October 28th, 1929, the Dow Jones Industrial Average fell a whopping 13%. It was called Black Monday, and it's held that name ever since. But just the very next day, Tuesday, the 29th, the market lost again. It was down 12%. It became known as Black Tuesday. A couple of black days in a row, not good. It's bad to lose 25% of your retirement account in 2 days, and it's even worse when you lose 50%, because what happened is in the next trading days after Black Tuesday, the market fell more. By November 13th, it was down 50% from the high in September. But the carnage wasn't even close to over. The stock market continued to go down. It went down steadily day after day for like 2.5 years. The stock market didn't bottom out until July 1932. And when it did finally bottom out, it lost an unthinkable 89.2%. Could you imagine the horror, the financial devastation of losing 89% of your retirement account? So stocks, corporate bonds, real estate, all got decimated. I mean, we're talking wiped out. By 1932, the Depression was in full force, full blown. And it would take another 22 years to recover the losses. But wait, there's more. That's only part of the financial destruction. During that time, there was also widespread, overwhelming bank failures that made the Depression even worse. Between 1929 and 1932, about half of all U.S. banks failed. Say, what?
Wow.
Yeah, you heard right. Think of it. Almost 9,000 banks obliterated, gone. And gone with it was the entire life savings of millions of Americans. Poof, your money is vaporized and you're left with nothing. That's why your grandparents and great-grandparents kept their money at home in a coffee can, right? And they didn't trust banks and they didn't trust the stock market because they saw the devastation firsthand. But think about it. What would you have done? How would you recover from that kind of financial apocalypse? Why am I telling you all this? Well, I'm reminded of the words by Mark Twain, who said, "History doesn't repeat itself, but it often rhymes." So where can you put your retirement money to keep it safe and growing without fear of loss in the stock and bond markets, real estate, and bank failures in the coming economic crash? Start by looking at alternative asset classes used by Babe Ruth. He hit a grand slam home run during that crash and through the Great Depression. It kept him in the money, so he never had to worry about his retirement. So here's the history of Babe Ruth and how he was able to win his money game and achieve financial freedom.
In 1922, Babe Ruth was the highest paid baseball player in the league. He made a salary of $52,000 per year playing for the New York Yankees. That's close to about $1 million in 2024 dollars. And as so many professional athletes do today, Babe spent the early part of the Roaring '20s spending his money. He was well on his way to becoming a celebrity financial statistic. Another athlete paid exorbitant amounts of money only to wind up flat broke a couple of years after retiring. We hear the stories all the time.
Yeah, and concerned about Babe's financial behavior, his business manager urged him in October of 1923 to meet with future Hall of Famer Harry "Slug" Heilman of the Detroit Tigers. During the offseason, Harry worked as a life insurance agent, and with Harry's help, Babe purchased life insurance and his first annuity. Then for 7 years straight, so from 1923 to 1929, Babe Ruth invested half of his annual salary into buying annuities every single year. So just like Babe was encouraged by his business manager to meet with a financial professional to fix his saving and investing, we want to encourage you to meet with us. So you're financial coaches, so we can help you with your savings for retirement. We can help you get the right life insurance and annuities just like Slug did for Babe. So click on the link in the description box below and schedule a free 30-minute discovery call with Coach. Now, when Babe began making his annuity purchases, he had no idea that the Roaring '20s were going to come to a crashing halt just a few years down the line. Fast forward 6 years from the stock market crash, and Babe, the Sultan of SWAT, was forced to retire from baseball in 1935 because he just couldn't handle it physically anymore. Babe, once the highest paid player in baseball, is now smack dab in the middle of a depression, out of work. Unemployed, no income. But Babe didn't become a financial statistic like so many other athletes and celebrities of the day. Thanks to his financial planning and 7 years of consistent annuity purchases, Babe was able to flick on the switch and start receiving monthly cash flow, monthly income from his annuities. And it, at the time, was paying him $17,500 a year, which would be the equivalent of you receiving $400,000 a year in cash flow every single year in today's money.
Right.
So while many celebrities and athletes of the day found themselves in the breadline and financially devastated, Babe Ruth was living the high life. He was totally set up with guaranteed monthly income for the rest of his life. Babe never had to worry about money again, and it's interesting because the number one fear of retirees today is outliving their money.
That's right.
Babe never had to worry about that, and you shouldn't either. Babe Ruth, arguably the greatest baseball player of all time, took advantage of the greatest retirement income plan of all time with annuities.
The Babe was so impressed with the power of annuities in creating financial freedom that he directed his estate to purchase a lifetime payment annuity for his wife at the time of his death so that she would always be taken care of. Her annuity made sure she would never run out of any money either.
The great Bambino left behind an invaluable financial lesson for all of us to help us win our own money game and be able to retire with true financial freedom. By taking advantage of the guaranteed income found only in annuities, you can retire knowing that you'll never run out of money, no matter what happens in the stock market. If Babe Ruth had invested all of his money in stocks and corporate bonds and real estate like everybody else was doing in the day, he would have been financially devastated. We would not be having this conversation right now. But Babe didn't do that, did he? He didn't follow the conventional wisdom of Wall Street. And he took investment advice from outside of Wall Street. He followed a different path for asset allocation, and it paid off for him when everybody else around him was failing. Babe Ruth thrived during the Depression because he owned the right asset class at the right time. He owned annuities. He owned the best asset class that would guarantee him lifetime income no matter what happened to the stock market or the economy. Babe Ruth is famously quoted as saying this: "I may take risks in life, but I will never risk my money. I use annuities, and I never have to worry about my money." Oh, what a great feeling that would be, right? So instead of asking what's in your wallet, I want to ask you what's in your asset allocation. Do you have annuities to provide guaranteed income for as long as you live like Babe Ruth did? Or are you blindly following Wall Street's outdated advice about asset allocation and putting it in stocks, bonds, and cash? Listen, there's a whole herd of financial lemmings out there that are careening off a cliff to their certain destruction. Break out of that and set yourself free. Enjoy the financial freedom and guaranteed income that you can receive by including annuities as part of your asset allocation. Recently, Ernst & Young published a report where they looked at the ideal asset allocation to provide a guaranteed maximized retirement income and leave a legacy. And they looked at stocks and bonds and cash value life insurance and annuities. And what they found is that the ideal asset allocation to optimize retirement income and leave a legacy was 40% equities, 30% permanent life insurance, and 30% income annuities. Now, you're never going to hear that coming out of a financial advisor on Wall Street, right? But that's the research that they did, and the numbers proved it. So if you know a baseball fan who is looking at retiring in the next few years or has just recently retired, please share this video with them. Encourage them to review their asset allocation now and not wait until a financial crisis happens. Encourage them to start saving and investing like Babe Ruth did and include annuities in their portfolio. There are signs all around us that suggest we need to move quickly on this and reallocate our portfolios outside of the normal Wall Street suggestions. We can help you do that, so don't delay. Schedule your free 30-minute discovery call with Coach right now and find out what opportunities are available to protect your income and guarantee a successful retirement. See you on the next video.